Welcome to the Young, Wild, Financially Free podcast, an audio experience where we don't just talk about it, we live it.
Hey everybody, welcome to the Young, Wild, Financially Free podcast. My name is Andrew Roberts, and I'm here with my wonderful, beautiful co-host,
Matthew Teifke. What's going on?
That's right, yeah. And of course, you guys know that our company is Tree Homes, but we are in the ATX podcast studio today. And this podcast is provided by Texas Best Credit Repair. Our good friend Sammy Naken is the owner of Texas Best Credit Repair. If you need any help with your credit, whether you have bad credit and need good credit, or if you have good credit and want great credit, call him. He's the man, TexasBestCreditRepair.com. But today, we're really excited.
Yeah.
We have a couple awesome guys from CMG Financial in the studio. Fred, Ronald, Ron.
Good afternoon.
How you guys doing today?
Great.
Great.
Wonderful.
Every day's a great day.
Oh, yeah.
Awesome.
Thanks for coming. Appreciate
Absolutely. We
Yeah.
appreciate you
Appreciate it.
guys having us.
Of course, yeah.
Yeah.
So with each of you guys, I kind of wanted to find out a little bit about who you are, and then we'll kind of talk about CMG Financial, what you guys do, in this wonderful industry that we're in. So Fred, we'll start with you.
Sure.
Where are you from originally?
So I'm from Austin.
Oh, wow. You're the one.
Yeah. I'm the one.
Me too. Me too.
Yeah,
I'm from Austin as
I knew
well.
that. Matt
Yep,
also,
yep,
yeah.
yep.
So I grew up in Austin. Went to Austin High.
Okay, cool.
So, and loyal forever.
All right.
And then I graduated in 1987. I left there. I went to University of Texas, so I traveled very far.
Mm-hmm.
And I graduated from UT with a degree in economics in 1993. And then when I left college, actually, I moved to Colorado for a little while, and I worked on a ranch in southwestern part of Colorado for a few years. And I wish I could have made a living at that, because that's where I'd be right now.
Sure.
But so I did that for a while, and then I wore a few hats. Back then, I was actually an oil and gas landman for a little while. Worked for an irrigation and landscaping company, had my own company, and then I worked for a commercial real estate firm, Retail Solutions,
All right.
for a while. And then after that, then I had a good friend of mine. His name's Brian Dorsey. He actually is the branch manager at CMG Financial. He and I got to be really good friends, and he kind of recruited me, I guess, and was telling me about CMG, and so I decided to make a change. And then so I landed there. So I've been there about a year and a half, a little bit, maybe a little bit longer.
Man, it's been that long?
Yeah.
Wow.
It's been that long. But,
Miserable year and a
yeah.
half.
Yeah.
Terrible.
But I'm really enjoying it. So it's
Good.
been really good.
That's
Yeah.
awesome.
Yeah.
Ron?
Well, Ron Muljadi. I actually am also an Austinite,
All right.
technically. Been here about 28 years.
Okay.
Went to Bowie High School, James Bowie. Go Bulldogs. I guess the famous thing that I tell people, I went to Bowie. We faced Drew Brees in Westlake. We lost, of course, like 56-0, but that doesn't matter. I don't think about
This
that.
is a fun fact as well. Sorry, just to interrupt. But my high school, Round Rock High School, we played Lufkin, and Des Bryant was a wide receiver at
Wow.
Lufkin when we played him in the playoffs. And then he went off to be,
That's right.
Yeah.
He's
But
no
look at where he is.
Drew Brees.
He's no Drew Brees.
he's
I mean,
not
at
at that time, nobody knew
That's true.
who Drew Brees was, unless you're in Westlake. But then,
Yeah.
of course, Drew Brees became. Yeah,
Right.
that's my fame.
Most yards all time, right? I think so, right now.
Yeah.
Oh, yeah.
Brady's coming for him, but
Yep. Absolutely.
Well, sorry to interrupt.
No,
Continue.
no, it's great. And then went also University of Texas, and then pretty much been here all my life. Now, I did earlier we were talking about it, but I started working at a restaurant, washing dishes, moving up to the busboy, waiter, kitchen staff, and all that stuff. So, I guess I had to work it up.
This is in your college days.
Yes.
Okay.
So I started in high school.
Okay, all right.
So I started in high school doing it, then of course during college.
a few different restaurants. Or
A few different restaurants, a couple of Asian restaurants, and then Macaroni Grill was a good place. Actually, I still go there because I just love Macaroni Grill now.
Yeah, it's a good place.
And then started to work. One day before I went to work, I actually made a deposit at the bank. And then I asked the teller there, "Are y'all hiring?" And then she said, "Yeah, we're hiring." So I applied, and then I worked at Frostbank. So just from there is when I started my banking financial career,
Okay.
going away from the restaurant stuff. And when you look at, I mean, I don't want to disclose this, but when you look at affluent clients' accounts and see how they do things and how they manage their money, it gets you thinking. It's like, I don't want to live that paycheck to paycheck life.
Sure.
And so I kind of followed, and every time they came in, I kind of asked them for their, what they do in their daily life or how they use their account. And they told me. And so that's when I realized I needed to do something. And there was a product that I really liked that I tried out. And it got me to where I am today, which I can elaborate, but it got me today to where owning 3 homes. One of them is paid off, another one almost paid off, and of course my primary home. And hopefully the next few months I can get another couple of homes, duplex, and have trust homes rented out for me.
So when you were talking to the guys that were kind of showing you what they were doing, was it real estate, or what was it that you saw people doing?
Well, what I saw them doing was, some of them, of course, they made money. I mean, they were making 6-figure incomes. But what separated them was being able to purchase something cash, or having the ability to buy something without always applying for a loan with a bank. And so that product is actually a line of credit. It was a personal line of credit. And so the higher the line of credit you have, the more flexibility you can to withdraw that money and buy a car, buy a house, put a down payment on an investment property without having to apply for, a mortgage that takes 30 days or 45 days, depending. So, and a lot of those influential clients, they had a line of credit of $100,000, $200,000, $500,000. And so they've always had it there. It doesn't charge you any interest if you don't use it. It doesn't charge you any annual fee. But when you do use it, it's just like cash.
Right.
And so they were able to use it as buying property and build their wealth at the same time. It was just amazing. I'm sorry. So yeah.
Dude, it's funny because, like, personally, I've done a lot of different types of loans and learned a lot, and I've never been able to get the line of credit. And the line of credit is, like, to me, like, it's like the holy grail. It's like, I want that line of credit so bad.
And it's so true. Working in the banking for it was 12 years I worked in the banking. I tell people, apply with the line of credit. Even if you get a $2,000 limit, it's okay. Apply for it. 6 months later.
Yeah, you got to start.
And then reapply for it and get increased. I didn't
think about that. I kept just thinking, I need $1 million or half
No.
a million. Like,
Right.
Well, give me $20,000. Come on.
Yeah. So I started with $1,000. I got declined. Actually, my first time I worked at the bank and they declined me. So I was like, I know. My paycheck. You have my paycheck.
Kieran, I'm going to see you at lunch tomorrow. You can't do this to me.
Yes. But finally they gave it to me. So I started with $2,000. Actually, I was able to work myself with $2,000, increased it to $5,000, $10,000, $25,000. I can honestly say right now, I mean, not bragging. I'm not one to brag, but I looked at the other day. My line of credit access right now is $701,000. $701,000. Thanks to the all-in-one product, though. So, but
oh my God,
$701,000. That's interesting that there's that one.
Yeah, what's up?
I know.
Why not just 700?
I want to be exact.
That's amazing,
Yeah,
man.
yeah.
That's
Yeah.
amazing.
That's
So
very
you
cool.
the cool thing is,
wow.
I don't think everybody understands what it is, but it's the ability to draw money basically like cash.
Like
It's
cash.
as good as
Yeah.
cash.
Yeah.
And so you have that just sitting there, meaning you just can look at every deal you can every day and jump at anything you want.
Anything you
Right.
want,
Yeah.
That's awesome. So going.
So speed.
Yeah.
Yeah, it's all about speed.
So what did you get your degree in?
Economics.
Okay, cool.
Yeah.
Oh,
So I don't know if that's in the same.
Twins.
Wow.
You were just a little older than me.
Yeah.
But not that much older, Fred.
Exactly right. Just a couple years.
So did you start working at the bank before you graduated? After you
Oh
graduated?
no, it was after. It was
Okay.
definitely after.
So
there was some.
Did you want to get into banking? Was that like one of the goals? For
I like
your
money.
Career?
And so, and it was one of those interesting things that, like I said, I just walked in and I just asked, because at the restaurant, you make daily deposits. And so I was doing those deposits. Your boss trusts you to make those deposits. And then every day you just make the deposits. And then just one day it's like, I can do that job. Why not?
Sure.
Not saying anything bad about the restaurant people. I mean, they're great. Servers are great. Cooks are great. It's a great profession. But I thought I'd be better suited as being in the financial world. And so I thought, start from the bottom there. I started as a teller. So.
All right. Yeah. What did your parents do?
So right now my father, he is a real estate agent, but before they actually opened a restaurant.
Okay.
So in the 90s when I was 11 years old or whatever. I worked at a restaurant too, helping my parents.
Okay.
The restaurant still exists right now. It's off of East Old Wharf.
What's it called?
Called Java Noodles.
Okay.
We don't own it now. We sold it back in the 90s.
It's really run down now.
Well, I'm not going to say anything bad about that. No.
Yeah.
It's not the same quality of food.
Sure. Yeah, I got you.
But
So,
yes.
real quick, one thing about Ron. It's a small world.
It is a
but,
small world.
Yeah. So, Ron actually worked for a good friend of mine, and Matt, you know him, Herman Tajaha.
Yeah.
Oh, you know
Yeah.
him too?
Yeah.
Yeah.
Oh, nice.
Yeah.
Okay.
So Herman went into the commercial
Wow.
real estate business
Yeah.
also, and so Ron used to work for him at that restaurant.
Okay.
Oh, wow.
Very cool.
So
Yeah.
Herman's restaurant was Hunan Lion
Hunan Lion.
off of Lamar.
yeah.
And
They're
That's
still around?
familiar.
They're still around. He's
Yeah,
not
I
the
thought
owner.
so.
Yeah,
He's not the
but
owner.
Hunan Lion's still
Yeah,
around.
yeah.
So washing dishes, he gave me that weekend job of washing dishes at Hunan Lion,
Oh wow.
and made my first couple of dollars there. I was like, this is awesome.
Yeah.
When you're a legal age of not working age.
Right. Yeah.
But we won't talk about that.
So Fred, what was your goal with getting a degree in economics from UT? What did you want to
What was
do?
my goal from beginning? I wanted to get something. I wanted to graduate for one, and then I
Okay.
also wanted to graduate from the business school, but I didn't quite have the grades to get through the business school. So economics sounded pretty much like business, I thought. So it was in the liberal arts degree, so it was a little
Right.
bit more lenient. So
Gotcha.
I was able to get through
Okay.
with an economics degree.
Sure.
So it sounded good to me.
Gotcha. Yeah.
Yeah. Otherwise, I really didn't put it to use until now.
Sure.
Probably,
Really?
30, 25 years
Wow.
later.
Wow.
Yeah. But
And so
So-
when you were a kid, did you have a dream or a goal of what you wanted to do when you grew up? Because Ron says he loves money.
yeah.
So that was
I mean, tell me who doesn't love money.
Yeah.
I didn't really have a dream or a goal. I really liked working hard.
Okay.
I think that was instilled in me. I know it was instilled in me by my parents. My dad was a pharmacist. He was an independent pharmacist. He had a pharmacy on Congress Avenue for 20 years probably, and
Wow.
then he sold the pharmaceutical part out, and then my mom had a card and gift shop downtown on Congress Avenue for about 30 years, and I was always downtown. Grew up downtown in a way, I think, and I was always either working there after high school or after college, or after classes, whatever. I was always going downtown and doing work down there, and it was downtown back then. It's changed a lot since then, but it was still vibrant, not quite as vibrant as it is now.
Mhm,
But yeah, so I grew up with a really my dad was always working.
Yeah.
So they instilled that in me at that point in time. So
Sure.
just a good hard work ethic, I guess.
Yeah. So not a real exact
Not an
kind of
exact
goal, but knew that, like,
but just knew that I
you
like to
love
work
working
hard. I may
hard,
not
yeah.
be the smartest guy in the room, but I want to try to be at least the hardest working guy.
I
Yeah.
love
in
it.
the room.
That's
If at all.
good.
That's
If at all
awesome.
And I gotta
possible.
give you,
So-
I gotta give you props because when I started in commercial real estate,
Yeah.
you probably remember this when you first started, but like you're trying to get people to call you back, and nobody will. It's the
Oh,
weirdest
yeah.
thing ever.
Yeah.
But
nobody will.
I remember
And then-
you always called me back, and that
Yeah.
goes a long way. So
Oh yeah.
yeah.
Yeah. Absolutely.
It's
So-
crazy though. I mean, people will try to, if you're not in the real estate business and you're just driving and you're trying to get a broker to call you on a commercial real estate sign, it's almost impossible.
Yeah.
And then if you're a
Well-
broker, it's impossible until they know who you are.
Yeah.
And that's just
Yeah.
how it works, right?
Yeah.
That's
It's
not how you did business. And
no.
I think
it's not
that
good
goes a
business.
long
yeah,
way.
Yeah. You got to build a relationship with somebody, and so
Mhm.
that's really important.
Yeah.
Yeah.
So, at what point did you start thinking about real estate and investing, and kind of just this whole part
Yeah,
of
I mean,
the
I
world?
kind of came to the point in a time in my life, and I kind of came to, I guess, a crossroads, I guess, where I had a choice of what I wanted to do, really, and I kind of thought of a few different options, and just being from Austin and seeing everything that's been going on in Austin and how it's changing everything, and I was really real estate always interested me, I guess, at that point in time. And
Gotcha.
so I just, I felt like I knew a lot of people here, and it'd be, a good avenue
Mhm.
for me at that point in time.
Gotcha.
So, yeah.
Yeah. Awesome. So now you've been with CMG for a year and a half.
Yeah.
And how long have you been with CMG?
Mhm.
2.5 years. 2.5 years.
Okay.
Yeah.
And were you with Frost up until then?
No, I was
Okay.
actually with Frost Bank, and then University Federal Credit Union,
Okay, cool.
and then another mortgage company that is no longer in existence here in Austin. And then I was blessed to be invited to CMG. So
Nice.
Yeah.
Yeah. So you've done it from a lot of different angles.
Correct.
And
Yeah.
how different companies just completely different on the loan side?
Yes, no. I mean, Frost has their way of doing business on the loan side. Of course, University Federal has their way. And then the other company that I won't mention the name that's no longer in existence, they definitely didn't have, they had a different way.
Yeah.
But CMG, definitely, I mean, the way that they operate is fantastic. So,
Gotcha.
yeah.
Yeah, that's awesome. And so before off air, you guys were mentioning something cool that you guys have been talking about before with CMG.
Yeah.
Let's dive
the product.
Yeah, let's dive
it's
into
the line of credit, right?
Oh, that's
yeah.
cool.
Well, that's a
It's-
part of it, right?
yeah,
And nobody
absolutely.
offers it.
Right. It's similar. It's a line of, it's kind of like a line of credit. Yes.
Yes.
So it is a product called the All-in-One Loan, and it is. We're the only company in the United States that offers it, actually.
Okay.
So I think CMG rolled it out in 2005.
2005.
And then actually, I believe in 2009, we applied for a patent for it, and we have that. So we're the only company in the United States that does this type of loan.
Wow.
And it's been around, actually. I'm not sure exactly how long it's been around, but in Western Europe, it's used in Australia, New Zealand, and so a lot of other countries utilize it. And it's just something that the United States is just really not taking hold of yet, and
Not used to,
Not
because
used to.
everybody's used to the traditional 30-year mortgage.
Yeah,
yeah,
That's all you hear about.
yeah.
right.
Right.
So the 30-year fixed mortgage actually was started back in the 1930s. So
Yeah.
it's been around for 90 years, and nothing's really changed. And
Mm-hmm.
there's a lot of different things that everybody's different, and one mortgage is not going to fit everybody. So this mortgage, the all-in-one loan, you can kind of tailor it basically to your own needs, to your income, to your expenses, to each individual a little bit more.
So the all-in-one,
Yeah.
because
Let's
it
break
is,
that down.
yeah,
Are there like higher qualifications?
a little bit. So the all-in-one,
God, all right.
so
It's too good.
it's too good to be true. It really is.
Yeah.
No, the all-in-one, it is it just rolled out in Texas. So that's why Fred and I are here, but it just rolled out in May of this year for the state of Texas. Texas has some stricter guidelines on homestead and equity loans. So this product in Texas is only for investment property or second homes. So, or, you don't have to own an investment property already. If you want to purchase an investment property, you can use the all-in-one.
Mm-hmm.
The way that I tell people, the all-in-one is an offset mortgage. Google offset mortgage, and you'll know what it is. No, it takes the benefit of a home equity loan and the features of a checking account and combine them into one to help you reduce your principal balance on your mortgage, on that property. Because at the end of the day, you want to be able to pay your principal balance faster so you pay less interest over your life of the loan.
Mm-hmm.
The traditional mortgage, the 30-year fix, it's already kind of set to what your principal and your interest, and you pay it that way. But it's front heavy on the interest, and then the principal is you just pay it later.
Mm-hmm.
So that's why most people just kind of lose money just because they're paying too much interest.
Right.
But this product, it helps you to reduce the amount of interest by paying the principal balance faster.
So 30-year fixed, usually, you're not going to really start reducing your principal balance until year 19 or year 20
Mm-hmm.
of the 30-year loan. So with the all-in-one loan, I mean, day one, you're starting to reduce your principal balance.
Gotcha.
So, and that in turn, obviously, is going to have a huge effect on how much interest you pay over the life of the loan.
Yeah.
Can you
So-
walk through that? Because I was thinking more about the line of credit, which you're not really paying that down, right?
Well,
But with are these two different loans?
nope, same thing.
No,
Yeah,
Same thing.
same thing. So
All in one.
all in one. we combine everything into one.
You got it.
So are you just saying that you get the line of credit to pay off the principal?
No. Okay, here we go. So we need a couple of shots here. No, okay. So imagine you have a property that you own free and clear.
Okay.
And the only way to take out money is if you do a cash out refinance, investment cash out refinance to take out $200,000.
Right.
With the all-in-one, you take out a line of credit for $200,000.
Okay.
If you don't use it right away, you pay no interest.
Right.
But if you happen to want to buy another property, you transfer from that account to your checking account of $200,000 to buy something cash.
Right.
And then at the same time, the way you bring down your principal balance is by just making daily deposits into your checking account. So anytime you get paid or your payroll on a Friday, it reduces it your balance goes up on your checking. At midnight, it offsets to pay off your line of credit balance.
So it transfers from your account.
Checking to your line of credit at midnight every day.
Okay.
And so that's
how much?
all of it.
All of it. So
Just whatever's in there.
Say
Whatever in your
say
checking.
you deposit $5,000.
Mm-hmm.
That automatically goes in and is going to come off your principal.
Okay.
And then
Night.
that day
I see what
is,
you're
And
saying.
then it's
and that
gonna-
day is charging
I see
you
what you're
interest on that day. So simple interest being charged on an average daily balance of your
Right.
principal balance.
So are there now are there terms to this, like as opposed to the 30-year fixed rate mortgage? Is it still 30 years, or is it like since like if there's different amounts each day in your account? Does that mean that it's
So
up to you how
no.
long you?
So the term is 30 years.
Okay.
You have 10 years access to the full 100% line that you applied for in the beginning.
Okay.
And then after that, it reduces by 1/240th every single month on the principal. Because at the end of the day, we don't want you to have a mortgage. I mean, that's,
Right.
we want you to pay
We
off your
want you to be
mortgage.
there for 30 years.
So you're saying that whatever amount you put in your account, that's what's going to go towards the line of credit. What if you put nothing or $1?
okay.
It
Doesn't
just
matter.
stays
It
the
just
way
stays.
it is.
Yeah.
So you don't have
simple interest
to-
is going to be computed on
Got
that
it.
balance.
So I see what you're saying.
Yeah.
So you can just leave it out as
Yeah.
long as you.
Yeah. So Andrew, who has a rent house in Hutto.
Yep.
Correct?
Wow.
Yeah.
Did your research?
Yeah. So,
They're on to me.
Yeah. and I've heard you say that became, how you talked your wife into this was say, hey, this is going to be our new savings account.
Yeah.
Okay.
That's
So
right.
that's exactly what this is, literally.
Literally, yeah.
in a way.
But
yeah.
if you have a traditional mortgage, it's not really gaining you a lot of money if you really look at it because of the interest that you're paying on it.
Mm-hmm.
You have maybe a cash flow of $100, $150. I don't know what the cash flow is, but you also are paying that interest.
Right.
So, and then if you ever decide to sell your home in 15, 20, 30 years, yes, you make appreciation value, but nobody really realizes that you have to
How much
subtract the interest that
interest
you
you
have actually paid.
Yeah.
Now, if there's a product that you can put all your income in, but not be worried that, well, I got to have a savings account. Okay. Well, if you put $25,000 in a savings account, what does it do for you?
Mm-hmm.
Peace of mind, security,
Right.
nothing.
Nothing.
Earns you 0.5%. But if you can use that same $25,000 to bring down your principal balance and pay less interest on a mortgage,
Mm-hmm.
let that money work for you. That's how you build wealth faster. Because interest is killer.
Right.
It makes the banks richer by paying interest.
Yeah.
But if you can reduce that, it builds wealth to the consumer.
Mm-hmm.
And that's how you do it.
Wow.
So,
So this is a new product for you guys.
brand new for the state of Texas.
State
Got
of
it.
Texas, yes.
Yes.
Okay.
Yeah.
But-
yeah, they've been doing it in California since
Yeah.
2003.
So everywhere in
So
the U.S., you can do it on your primary investment, second home, any home.
Okay.
But in the state of Texas, unfortunately, you can only do it on your investment and your second home because of homestead laws.
Homestead laws.
Yeah.
For now.
For now,
Okay.
we're trying to fight it.
Right.
Gotcha. Okay.
Yeah.
And so can you refinance into this?
Yes, I did. So
cool.
okay,
There you go.
Yeah, so
Cool
yeah, you
example.
could take your rental house and refinance into this,
Right.
and then take those proceeds and you want to go buy another house.
Gotcha.
So,
Yeah.
just with cash.
Awesome.
So the reason I love this product, and I'm gonna full disclosure myself, I'm gonna tell you everything about my life, because I do. And I tell people that I'm an open book.
Good, man.
So I bought my condo investment, and I told this to Fred. My investment property condo in North Austin, I bought it using credit, $200,000 credit, cash. That was before the all-in-one came out.
Mm-hmm.
So, well, people ask me, Ron, how'd you do it? I use every line of credit that I was able to apply for, and every credit card that I had, because technically a credit card is a line of credit.
Mm-hmm. Yeah.
I took all that credit and I said, honey, I'm going to buy this cash. And she said, you're crazy. I said, I'm going to make it work. So $200,000 cash, the rent that was coming in, our income for my wife and I, we paid down as much as we could on the principal balances. So we calculated how much interest we actually paid for 1 year. It was around like $5,500 worth of interest. Versus I calculated if I did a traditional 30-year investment property, I would have paid about $8,000 worth of interest the first year. So it's already less. Save $3,000. over time, I paid it off or paid down the balance. That condo is now technically free and clear. I paid off all of that. Within about 7 years, I paid it off.
Wow.
Using a line of credit. Now I have it free and clear. When the all-in-one came out, I actually applied for the all-in-one on that condo. Now I actually got so the condo is now worth $300,000. Was able to take 70% LTV on that $300,000 condo. That is part of my line of credit right there.
Yeah.
So now I can buy anything, cash or residential, commercial. I don't have to apply anymore. Sure. It's there.
Right. Yeah. Awesome.
It's really making me think.
Yeah, really.
So if you would have done a traditional mortgage with what you were just talking about, and your goal was to pay that off as quick as possible, is that the same outcome?
No.
No. You're going to pay way more interest in a traditional mortgage.
Just because if you took at the time, because of the interest being top heavy or front heavy on the traditional mortgage.
But if you have like a $200,000 loan that's on a 30-year payment, if I were to actually give them $200,000, that would pay off my loan.
Correct.
I don't have to pay all the interest that I technically would owe.
True.
So what I'm saying is, if in your scenario, you basically made as much money as you could to pay off that as fast as possible.
Correct.
Could have done the same on a 30-year loan.
But the reason I didn't is because now, once I pay off my investment property, it's just free and clear. Right. It's just getting me monthly rents.
Right.
I can't access that equity until I apply for another loan to take out the cash.
Right.
And the interest was less on all the credit cards and all that stuff. Than what you said, because you said it would have been $8,000 worth 5,000.
Correct.
Right.
Because that would change on year 20. It would be a different story.
Correct. So the only reason the gamble that we took is because I wanted to see if I could use a line of credit to buy something, which it happened, and if I could pay off that line of credit to save me interest over time. And it did. And so when this all-in-one came out, it was perfect for me, is because every day I would have to transfer money from my checking to my payments. This one automatically does it at the end of the day. So less worry for me.
So what's your strategy? Do you put $5 in there a day, or
so the strategy is I calculated, and this is more of a numbers thing like Fred was talking about. I calculated when was the optimal time to pay my bills. When is the optimal time to have the money in the account? Most Americans or most people, they get paid on Thursday or Friday, but their bills don't get paid until Tuesday or Wednesday technically. So if you deposit your money on a Thursday, you have $2,000 or $3,000 on Thursday, Friday, Saturday, Sunday, Monday. What is it doing for you? Nothing. So what I did was I transferred that $3,000 to my line of credit. Now I pay $3,000 less interest on Thursday, Friday, Saturday, Sunday, and then transferred it back on Monday when I knew the bills were going to post on Tuesday, Wednesday, and Thursday.
Wow.
So if
you gotta be kidding me.
Wow. I did that for years. I tell people,
that's fascinating.
You always get paid on Thursday and Friday, but the bills are not taking out on Thursday or Friday. They're taking out on.
So you're saving. You're saving. It's a little bit, but
it's a little bit. But you add it up.
Yeah.
If you add it up to the principal balance of X amount of 100,000, that makes sense.
Right. It's amazing.
Right.
And then I cheated us also because on the mortgage, people don't realize that if you pay your mortgage on the 15th, it's technically not late. Well, check your disclosures, but most of it is you're not late on the 15th. So I've never paid my mortgage on the 15th.
Yeah.
Okay.
On my traditional one, I always pay. I'm sorry. I never paid it on the first. I paid on the 15th. I said, why? Because if I paid on the first, then it's not really doing anything because I'm not saving anything.
It's smart. Right. I met a guy that he gets rent on the first, and he like stock trades for like a week and a half, and literally consistently makes like 9 to 10%.
Nice.
He does some kind of futures trading, and he just makes. He's like, yeah, I make 9 to 10% every time.
And then he pays his mortgage.
No, that's true.
Wow,
that's risky.
But
it is risky.
It's risky, but if you know how to do it,
he's smart. I'm like, okay, you guys.
But if you know how to not manipulate, but if you know how the banking works. Then you know where your money is. That's you having control of your money and not having the banks control your money.
Right.
So smart.
Yeah.
So if you control it, you control how much interest you're paying, because that's the name of the game. Is it doesn't matter what the interest rate on a loan is. It's a matter of how much interest you're actually paying on what you borrow.
Mm-hmm.
I could be paying 23% interest on a credit card, But if I can pay it off in a week, who cares?
Right.
So it's what hurts people is mismanagement of funds that takes them a year or 2 years to pay off that credit card.
Right.
Now they're not controlling their money. So you have to have control of your money, and then you can build wealth on it.
Yeah.
So if you were me and you had 10 long-term mortgages, would you pay them off as quick as possible?
You can if it makes sense for you,
Right.
because you can pay it off, but then what are you going to do with those properties, getting the cash flow? Or if you had the money to buy 10 more properties, would you rather buy 10 more and gain double your investment portfolio?
Right.
Yeah.
Exactly.
It's just making me rethink, because I've always been of the mindset that that's fine that you're paying more interest on a mortgage because you're not really paying it, the tenant's paying it, which is true.
True.
Right. But there's another school of thought of like just getting it paid off as quick as possible.
Right.
And doing the
And
line of
saving
credit.
that money that you're
and
paying
saving
for
that.
interest,
Right.
or using it for something else, obviously.
Right.
So
Yeah.
because if you on the all-in-one, if you were to buy your primary home on this, or actually, I mean, investment property, I mean, if you're going to end up paying $300,000 in interest probably if you have a $300,000 home.
Oh, yeah, for sure. If you
$300,000 in interest.
Fixed.
Fixed 30-year.
And on this, you might
you're going to pay
$40,000. Who knows?
Well,
Who knows?
It's
Who knows
about
what
a
you're gonna
third usually is what it works out to be.
But I use it as, I tell, actually one of an investor came out and sat down to me and said, Ronald, what do you look for? Do you look for cash flow or appreciation? I'm like, well, no, I look for how much equity I'm going to get, so that what can I use with that equity? Because the cash flow, if it's $100 a month, does it really make sense? Appreciation, if it's only appreciated to $50,000 when you sell it, but how much interest did you pay? Are you really gaining anything? And then on top of that, you pay capital gains tax. Yeah, you get an interest deduction, which the all-in-one is interest deducted anyway, so that's balance it out. So I look at it as, if I buy something, can I leverage that property to get me 1, 2, 3, 4 more properties at the same time? I mean, that's what the all-in-one is about. That's why I have that line of credit now. So both my investment properties now have an all-in-one line of credit on it. So
That's awesome. New strategy.
it is.
I think our minds are blown.
Yeah, my mind's blown. I have to go think about this.
I
It
know.
takes a little while to
And
really
it all
think about it.
started
I mean-
with a line of credit. So I've been
Right.
doing this concept for a while. So when the product came out,
It
I
like,
was
bingo.
it just makes my life easier now. So I don't have to pay attention to my accounts anymore.
Right.
It's just there every day.
Yeah.
So
Yeah. Fred, have you dipped into the investment pool and
No,
buying some rentals?
no, I have not bought any rentals yet. So I'm considering that, but just haven't done it yet.
Gotcha.
So,
Yeah.
It'll be further down the line.
Sure.
But-
Yeah. I got you.
It ain't easy in Austin.
Oh
No.
man.
No, it's not.
No.
So
Yeah. we're just like,
you got to finding the deals.
Yeah,
really
finding the
takes.
deals.
But if you
Right.
find a deal, I tell people, when you're a seller, you look at a few deals that's being offered to you and you say, okay, I got a investor here that's giving me 25% down, 30-year, whatever. Another one that's offering me the first-time home buyer. Another one offering me this. Oh, wait, this one is offering me $10,000 less, but it's cash. It's guaranteed. These others, they got their pre-qualification, pre-approval. They still have to do an appraisal. They have to do this, that. Could take 30 days. And you know what? Sometimes it just falls off and the deal's not there.
Right.
So I tell them, if you have ability to put cash, the sellers, most of the time, 9 out of 10 is going to choose a cash, even though it's a lesser amount, because they know it's
Cash is king.
cash is king. It's done deal.
You got it.
Yeah.
Yep.
Yeah.
So
Earlier when I asked about the qualifications for this all-in-one, what does that look like for our listeners who are interested in this product?
So because this product is definitely, you have to control your money. The credit score has to be above 720.
Okay.
Your debt to income ratio cannot exceed 40.
Okay.
So because these guidelines exist, the product in general for CMG throughout the whole life it's been available has 0% foreclosure, 0% default. So
From
this
2008 through 2009, yeah, we have had no defaults.
no defaults.
Yeah.
Wow.
So
On
this
this
product
thing.
is great. So
It's the golden product.
it's a gold and
I know. Yeah.
and technically it is a golden product. What's interesting, and the reason most banks don't do it yet, is because they have to see, are we making money on this? I'm not knocking the banks, don't get me wrong, but if they see, oh man, we have the traditional mortgage that we're making hundreds of thousands of dollars versus a product that we can offer, but we don't know how much interest we're going to get because they could pay it off in a year, 5 years, 7 years. We don't know.
Right.
But this product is guaranteed, so that's why most banks don't offer this product, which they can.
So my question is, why do you guys do it? Do you guys make money off of this product?
Well,
And right. Yeah. But so
Yeah.
you're talking about these strategies about how to get around things and save a bunch of money. So is it worth it for you guys to offer this product?
full disclosure, we get compensated less on this product.
Okay, yeah.
But for me personally, I'm very passionate about this because I want to help people build wealth.
That's awesome.
I was able to do it. I think everybody else can do it. If you're able to control your finances, you can build wealth. The reason we offer this product is just because our VP of Finance on the All-in-One, he just wanted to have a product that is different, but make sure that it helps the consumer. And so that's why he created, or he adopted it, because it was already created in Europe and Australia.
Right.
But he adopted it and said, hey, let's do this.
Yeah.
And so he's also passionate about helping the consumer reduce their mortgage debt.
Yeah.
Faster. That's all.
That's awesome.
Yeah.
That's the answer. I mean, that's the answer that I wanted to.
So you think there's something about the loan inherently in itself? It makes you have to want to pay it off faster. That's why people pay it off faster than they would a 30-year loan.
Well, yes and no, because if you do your direct, because remember, it's tied to your checking account. So every day you make or every time you make a deposit or your direct deposit comes in, it automatically transfers and reduces your principal balance on the loan.
So your money is working for you all the time.
All the time.
Not just part of the time.
But it would be a totally separate account. Like, say I made $10,000. I'm like, yes, I'm
Deposit in your checking.
and then tomorrow it's gone.
Tomorrow's gone, and you have a zero balance in your checking until your next deposit.
Okay.
But there's no overdraft fee, so you can use it. There's a debit card access. I actually have a debit. I didn't bring my debit card with me for the All-in-One, but there's check capability, online banking, debit card. You'll never get any overdraft fees because, yes, your account will show negative, but it's just taking at midnight. It just takes from the principal balance of your line of credit to your checking account to zero that, puts it back in your checking to make it zero balance. You make a deposit on Friday, it takes that principal balance, puts it back into the line of credit.
And this would be a separate account.
Correct.
I just have my property account and then I have my personal account over here.
Yeah.
So I know what I'm putting in. I can have my own personal savings over here.
Yeah.
Yep. Correct.
Very cool.
I know.
Yeah.
That's awesome.
Yeah, it makes it simpler.
Yeah.
And also back to your question as far as are we making money or
Yeah.
the bank's making money, but usually how often does someone keep that 30-year mortgage before they refinance out of it or sell their house or do whatever? So usually you're looking at about 7 years. Somebody's going to refinance or somebody's going to sell their house and move. So that's the bank has got that loan for 7 years. They're making that interest and then it's going to go to somebody else possibly.
Right.
Yeah.
Gotcha.
So 30 years making all that interest. It's not going to happen all the time.
Right. Yeah.
So.
For sure. Gotcha. Good to know.
Man, so what would you say? So I'm really trying to think for myself, like how to use this, and I have long-term rentals, and I'm thinking about trying to get a line of credit, but the only way I think I could utilize this right now is to refinance all of my properties, but I wouldn't be able to pull any money out because I already owe so much on the properties.
No, so I can tell you this, that the All-in-One right now, you can only have up to four All-in-Ones in the state of Texas. Okay. So are your 10 properties, we can only refinance 4.
Okay.
Is that single family or what about commercial?
Oh no, only residential investment. 1 to 4 family.
Okay, got it.
So in your case, if you say you have a balance. Okay.
Yeah. Like let's just say I refinanced all of them in the last 2 years and I have 25% equity in all.
Correct.
In all of them.
So in the beginning of the loan, you won't have access to the line of credit per se because we're refinancing to pay off your original mortgage.
Right.
Okay. But then it gives you the flexibility. Right now, you're not trying to pay off your mortgage as fast because once you put your extra payment, you can't withdraw that money again. So it's kind of goes into a black hole, right? Mm-hmm. With the All-in-One, you can take any money you make and just dump it into one of the All-in-Ones to pay down that
and
balance.
Just pull it back when you need it.
And if you need it to buy, you can pull it back. But what happens is now you're saving interest overall.
Right, I get it.
So that's why it helps people build wealth faster. I'm not telling you to use this loan to go crazy in Vegas. Which side notes, the line of credit, back to line of credit, it is very awesome to use, but I've told many people about it because nobody knows about the line of credit. but I've had a small percentage that abuse the line of credit and they get more in financial debt.
Yeah.
Yeah.
It
So
can be scary.
It can be very scary
Right.
because it is just cash. It's just like just cash there that you can.
Well, you take it out, you go buy some stock. The stock goes down 20%. Then
Right,
you're
boom.
like, now what do I do?
Yeah,
Yeah.
exactly.
Yeah, man. Well, so for our listeners who are, I mean, obviously Matt and I are interested in this, but for our listeners who are interested in this, how can they find out more about it and get in contact with you guys?
You can go to.
It's
well,
you can study it. It's definitely on YouTube.
Go to our
Okay.
website.
I know you can definitely on YouTube.
Sure.
Of course, Fred and I have our own websites, but the general all-in-one, it's www.aioloan.com.
Okay.
And small little video, you can watch it and run a few simulators on comparisons between the all-in-one and your traditional mortgage. It's a great tool. And then of course there's a couple of YouTube videos out there already that CMG's created to kind of tell more about the product.
Sure.
Of course, just give Fred and I a call.
Yeah, it looks up.
That's
Okay.
fascinating,
Yeah.
guys. Yeah.
Yeah.
Cool.
That's
So-
really interesting.
Yeah, that's awesome.
Thanks for sharing that.
Yeah,
Yeah.
for sure.
Yeah.
And whenever y'all are ready, I mean, I have an app. So
Ooh.
the thing about me is, like I
I
said,
mean, it's a trigger word for us
Well,
millennials.
I know, right? So I am full disclosure is I show people my all-in-one account.
Okay.
So
Yeah.
I have nothing to hide. I mean, I'm not.
you take
the full disclosure.
I do.
Takes
I do. So I log into my checking account. And I say, here's my money. You see it's $0. Why? Because last night at midnight I transferred it to the principal. You see the principal. You see this, and I'll show you everything before anybody applies for it. They can play around with my account. That's how I believe in this product. So it's
Wow.
there, and I have nothing to hide. There's nothing to hide. It's there. It's
Yeah.
fantastic.
Yeah.
So
That's awesome, man.
Yeah,
That's
man.
awesome.
I'm gonna take you up on that.
yeah. Well, I'm gonna put y'all's information in the show notes below for this podcast.
Yeah.
Appreciate
this is
that.
On
Yeah.
YouTube, if you guys are watching this, then I'll put it obviously below. Fred, Ron, thank you guys so
Thanks,
much
guys.
for coming on the
Appreciate
podcast.
it.
I
Yeah,
appreciate
absolutely. Thank you
it.
guys.
Again, this podcast is sponsored by Text-Based Credit Repair. You can find them at textbasecreditrepair.com. Really enjoyed our conversation, guys.
Oh yeah.
Thank
really
you.
Appreciate it. Thank you
Yeah,
very
until
much.
next time.
Yeah,
Signing off.
Absolutely.